As far as the numbers go, the December sales in 2020 were just insane. Hey guys, Sean Bloomquist, Pine Financial Group, where we work together so you succeed. If you're watching this on YouTube, make sure to subscribe to the channel, hit notify so you are up to date on all the content we release every Friday. Today, I just wanted to take a look back at 2020 and the craziness it was for a year and how that affected the housing market and what we can expect going forward. 2020 was certainly an interesting year. It started out extremely hot. 2019 was a very good year, and 2020 looked to be even better. And then, as we all know, COVID-19 hit early in the year, and there was a lot of uncertainty. There were shutdowns all over the country for the hospitality industry and record number of people out of work, things like that. And just the uncertainty of, should I go out of the house? Am I going to get this crazy disease or virus or whatever it is? And people were unsure how it was all going to pan out. Well, the irony is 2020 turned out to be an even better year than expected and was one of the hottest years on record. The Twin Cities market in Minnesota, where I'm at, the numbers are just staggering. And a lot of it has to do with the record low interest rates right now are keeping demand very high. I think a lot of it has to do with people being pent up in their houses, having to stay inside and not go anywhere, and realizing that, you know what, maybe we want to get out of this house sooner than we were, or this apartment or condo or whatever they're in. And maybe it was accelerating that upgrade that they were maybe thinking about doing a few years down the road. But as far as the numbers go, the December sales in 2020 were just insane. 2020 December sales were up 20% here in the Twin Cities market over 2019. And December is usually one of the slower markets. I'm sure you all know this is a little bit colder climate, so December can kind of slow down with the holidays and all that. But 2020 sales were up almost 21% overall. The median price went up 10%, which is a big jump. And inventory is extremely low. I mean, we're down almost 40% in inventory, down to less than a month, which is mind-boggling. And when you've got demand as high as it is, people are ready to buy. And with a lack in inventory, they're moving fast, and they're moving for more than market value or more than asking price in most cases with multiple offers. One of the interesting stats that I saw was with not only COVID-19 and people out of work currently, we also had riots, which are not good for the metro area. There were many metro areas in the country that were in a state of disarray for a good chunk of the summer, and these riots didn't help keep people interested in those areas, to be honest. You've got some metro areas, Minneapolis is one of them, that they're talking about defunding the police, and that's putting a lot of uncertainty in people's minds whether they should even live in these areas. So you're seeing a movement of people towards the suburbs and even farther out than that. And it's not only from that. I think a lot of people are kind of going against the recent trends. The recent trends have been downsizing, the tiny home craze, which to be honest, I don't get, but minimizing. And you've got the millennials wanting to live closer to the downtown areas so they can just commute very easily without having to own a vehicle or multiple vehicles. They can just use public transportation. But what we've seen is people being stuck at home, now working from home, and will continue to work from home even once this pandemic subsides. You're going to see a lot of people that realize, hey, we don't have to be in the office 40 hours a week to get stuff done. We can be working from home. And they're realizing that, you know what, it's kind of nice to have some space, and I kind of need an office to work in, especially if I'm on Zoom calls or something like that. You don't want to be stuck doing it at the kitchen table on a consistent basis. So people are starting to actually move out and out farther, not only to the first tier suburbs, but even farther out than that. We're seeing areas that are actually 45 minutes to an hour outside of the downtown area that are just booming right now. Sales are up just an obscene amount, and days on market are down over 50% in these areas. And people are wanting to go out there because they're getting more bang for their buck. They're getting bigger houses, more space for less than they would pay downtown. And they don't have the uncertainty of, is the police force going to be defunded? Is the crime rate going to continue to rise? Because crime rates have risen across the country in metro areas. It's something that can't be avoided. So you're seeing people move out to these areas and not worry about the commute, because if they're working from home, they don't have to commute and drive to the downtown areas or pay for parking or anything like that. So we're seeing a big influx in these outlying areas of people wanting to buy out there. So if you're looking to flip houses or have rental property, don't be shy of going out to these areas. You can get them cheaper than you could in the closer to downtown areas or even the first tier suburbs. And when you go to put them on the market, they're going to sell, and they're going to sell for more than asking price in most cases. So don't be scared of doing that. So that was really interesting to see for 2020, that even with all the uncertainty and things going on with the pandemic and riots and job loss and all that, and now we've got a new administration in play, it'll be interesting to see for 2021 if these continue to go up like they have. And if rates stay where they are, I don't see it changing really. With the new administration coming in, there's always the uncertainty. Will rates go up? Will there be different changes made that are going to affect investors or first-time home buyers or anything like that? As of right now, I don't see any major changes yet. It'll just be something to keep an eye on. Keep an eye on rates and see if they do go up and if it starts to slow things down. But as of right now, in 2021, it seems like things are just going to keep rising like they were in 2020. And like I said, don't be afraid to buy in these outlying areas if you're doing flips or rentals, because they seem to be hot right now and people seem to be kind of migrating outward, maybe as they're starting families or things like that. Maybe it's a lot of first-time home buyers, I'm not sure, but it's certainly a trend to keep an eye on. Thanks for joining us on this video, and be sure to check back every Friday. And if you want more information about rates or investing in properties in these outlying areas, be sure to reach out to us at pinefinancialgroup.com.